Hi everyone, welcome back to our video series, and this is video 2 where we are going to be talking about structuring a client delivery meeting and structuring one that is compelling for the client, that they're actually going to want to talk to you and they're actually going to open up about what's going on in their business so that you can start to become a better advisor, okay? So I'm very passionate about this because the meetings that we have with our clients are at that time that we have that open dialogue, and we don't always have that. We don't have the time when we're just emailing clients back and forth. So when we actually have them in a meeting, this is gold. This is time where you can actually get really good conversations going so that you can get insights about what's happening in the business, so that then you can use your knowledge as an accountant, as a financial advisor, to be able to help them make better business decisions and ultimately become more value added to them, which hopefully means that you will have a better business because of that. So I've got some slides to share with you guys, and then we're going to hop back into Jirav and look at an actual financial reporting package for a month-end financial review. And so I want to show you that as well. But let's go ahead and hop into this content. Okay, so as I mentioned, we're going to talk about structuring a compelling client delivery meeting today. And why do client delivery meetings matter? I always like to start with why. It's really helpful to just frame exactly why we're doing this and why it matters. So first of all, when we have good meetings, that will increase your client satisfaction. Also, they will start to feel more connected to you, and that will help increase trust as you are actually sitting in on those meetings and being able to start providing insights, being able to start providing value. These meetings are great for that. And the more value that you are offering with your insights, they will start to trust you more. These meetings can actually increase business performance as well. So when a client is actually aware of their financials and they know what's going on and they know what targets they need to hit next month's forecast, they can actually take action and improve business performance. Having regular touch points with your clients can absolutely reduce surprises. So they're not surprising you with some really big news that you thought they would think to tell you, but if you missed a meeting, maybe they just didn't think to tell you. And then also vice versa, so that they're not getting surprised if maybe, for example, that they're made a huge profit in Q1 and they're going to need to make a really big estimated tax payment. We don't want that to be a surprise to anybody. These meetings can also help increase your clients' financial acumen. So just their awareness of how their profit and loss works, their understanding of what's really on their balance sheet, that they can have a better understanding of their own financials will help them speak the language better. It will help them run their business better, and you can help them understand their numbers better. And again, that goes back to building trust. If you are able to be kind of an educator and an advisor, that is always the best situation so that they can feel more confident looking at their numbers as well. And when you have really effective client meetings, that will increase the stickiness of your service. So with some of our clients, they have said that their financial review meetings are something that they will not miss, and that they are making sure that they reschedule other stuff in their schedules so that they can make sure that they're always there for those financial review meetings, because they are so valuable. We're able to talk about all sorts of different things during those calls. They're able to get insights on exactly how their business did in the past month, and they're able to talk about the future. So those are something that most business owners, once they start having those meetings, they want to have that touch base, because they start releasing then maybe the need to look at it on their own, and they start relying more on you to be able to present the financial information to them. So another thing that these meetings do for you is that they will increase the value perception of you and your services. So if these meetings are effective and they are accomplishing what you want them to and what the business owner wants them to, you're going to look more valuable in their eyes. So this kind of all goes back to your business, growing your business, increasing your monthly income, increasing your annual income with a client. If you are perceived as being more valuable because you are showing up prepared, you are showing up offering insights, you're showing up as a business advisor to them, then you will be seen as a more valuable asset to their business as well. So they're very important, is what I'm trying to say here. So how do we prepare for a meeting? When a meeting is coming up, first we need to make sure that we have our books closed. So if there's an internal close process, if you are kind of in a fractional CFO or even a controller role, you're probably involved in overseeing the close process. And you need to make sure that the close is complete before you start your analysis of the financial review for the prior month. So you could start it beforehand, but if numbers are still moving, you don't want to be jotting down an insight that, the numbers are moving and then it changes and then the insight that you had is not even relevant anymore because the books just weren't closed. So you can start before. It's not like Jirav won't let you do it, but just to confirm that the actual close is complete is best practice so that you're not duplicating any work. And then you'll go into preparing the financial package in Jirav. So I'm going to hop into an example of what that's going to look like. I'm also going to show you kind of some examples that you can put into a financial review package every month. And all of that can be built very easily and quickly in Jirav. And then you're going to prepare for the client meeting by actually doing work beforehand. This is not just about pressing a reports button and sending it off to your client and then showing up to a meeting and just telling them, what revenue was and what cost of goods sold was and what the marketing spend was for the month. Because really nothing makes a business owner more annoyed than you taking up their time in a meeting by just telling them something that they could have read themselves. As an advisor, we need to be bringing something to the table besides something that the business owner could just read for themselves. Nobody wants to sit in a meeting and just have a P&L read to them, okay? You need to prepare for the client meeting by actually looking through the numbers, starting to provide insights, telling them things that they might not know by just looking at the numbers in the P&L. So let's talk about what those things would be. So to prepare for a financial meeting, this is just an example of some things. You might do some other things outside of this as well. But what we do and what any good advisor would do to be prepared for a meeting is to first identify and note any large income and expense items. Like, let's say that the revenue was $400,000 for the month. What we like to do is we actually like to make a note in Jirav on the side of what are any notable large invoices that made up that 400,000, or was this just lots of tiny retainer invoices and it's all according to plan. Make some note about why it was $400,000. Oftentimes, business owners are not very clear on cash versus accrual. So you might have a business owner looking at a number and thinking, oh yeah, that $400,000 includes the $100,000 invoice that we invoiced to our largest client last week. But that invoice, is actually going to hit in May and not in April. So if that's the case, it's good to explain what is actually making up that revenue number, what is actually making up that expense number, because business owners are not thinking in this month by month timeline the way that we are. So sometimes they will think, oh, I just did that, so that must be what's on the P&L now. And they're not always connecting their actions to the timing of when you're reviewing the financials. So these things are really good to call out to them so that they just really understand what does that number really represent. So any large income items, expense items, anything out of the ordinary, anything unusual, anything that brought up questions for you. This has happened to me all the time where I might be reviewing the financials. I review in the actual accounting platform and dig into why is rent, double what it normally is? And I'll click into it and see okay, well, this rent check got paid at the 1st and the 31st of the month. And so maybe an accrual adjustment needs to be made or something like that. But when you're preparing for these meetings, you actually want to think about what are the questions that you're having as the advisor too. If in marketing, for example, marketing is just an easy one to throw out all the time because there's always a lot going on in marketing. But let's say that the client had hired a new marketing company to come in and they had fired the old one. You might have heard that they were changing the names of it, but maybe you weren't really clear on the exact name. And maybe the exact name of the company is different from what they told you versus what is actually on their W-9 and what they got paid for. So it's showing up in their books as a different company. You might just have a question on okay, well, who is the company you're working with going forward? What does that monthly retainer look like? Should we expect any, ad spend expenses, or should we anticipate any additional expenses beyond just that retainer amount? So any questions like that start to come up from the things that you are observing as you do your review are really great things to call out and have a conversation with the client about. You can also call out any trending increasing costs or trending decreasing costs. For example, I recently was with a client and we were looking at their outsourced HR expense, and we had budgeted $4,000 a month for this outsourced HR. And one month it hit $11,000. And then we had talked about it at that point in time, and it was, hey, yeah, there was this big project they were working on. It should go down next month. And then month 2, it was another $11,000. And then that brought up another conversation of like, what's going on? Why are we spending so much? So every month, because it was starting to trend in this higher direction, it brought up a conversation every single time. And then it helped the client go back and actually talk to the HR consultant and start to figure out why they were spending so much time, and help to figure out what we needed to do to reduce that time, and also to set some limits around that service, because apparently not enough limits had been set. So things like that, it was a trend that we were starting to identify, and the client needs to know that because they had no idea they were spending so much on HR services and that it was so much more than what we had budgeted. So again, any under budget or over budget items are great things to call out for a client. They might not have any idea that they're overspending in a certain category. And, it's fine if they do, as long as they're making up for it in other places. It's a great place to have a conversation with them about that as well. Or just the consequences of going over budget in a category, what that will mean to maybe their progress or like their other goals. If they have a profit percentage goal, for example, then that could potentially affect that if they're going over on their spending constantly. Also, if you are noticing any accounting misclassifications, you could potentially identify those and move them yourself, or notify the bookkeeper, whoever is in charge of those. Those are just sometimes good to note if your financials are not totally accurate because there have been some misclassifications. Then it's good to be able to identify those things. And then also like tax deductibility, like one really common one is, are your meals 50% deductible or 100% deductible? And making sure that you're understanding what's going into each of those categories and making sure that things are in the right buckets there. And then anything else that you think is important to talk about during the call. It's always good to like have notes prepared so that you can say, here are the things that I've identified as being important, or any metrics that you like to run. Like if you are most focused on, let's say, gross margin or just your profit margin, make notes about those things and maybe note like what they're doing that's going well, or maybe what they're doing that's not going well, or what are you seeing that's trending. So there's really no limit on what you can talk about during these financial review meetings, but what I wanted to give you here are some kind of things to start you off on so that you can start identifying things that you want to talk about with your clients. Okay, so let's get into what a reporting package could look like. And this is just an example, and then we're going to hop into Jirav real quick and look at what this example looks like when we build it in Jirav. So I always like to have like a cover page and then a commentary page so that we can keep notes and, put some to-dos and the agenda in there. And then I like to show the executive summary. I usually will put like a profit and loss in 2 to 4 ways. Look at maybe just the month by itself, a year to date by month, a year over year, or a year over year month to date, or year to date. And then we always would look at a balance sheet, a budget versus actual, cash flow forecast, and then probably put dashboards in there as well. So let's pop into an example here in Jirav. All right, so I am here in the Controller Essentials package, and I'm going to go to Reports, and then we're going to scroll to the Monthly Report package. So we're with Panda Corporation here still. And so as the previous slide that I was showing you, we have the cover page, I have a commentary page where I can list all sorts of things here. And then I have a dashboard because some clients really like to see the visuals first. And I think this is also about knowing your client. I have one client that loves visuals and pretty pictures and hates to look at Excel spreadsheets and numbers. And so we first focus on showing the dashboard because that kind of gives her a good visual before we jump into the numbers. Doesn't mean we skip the numbers, but it is nice to like give some pretty pictures because that's one of the things that she really enjoys. So you can put that, and then also with these, you can always move them around. So if you prefer to do dashboards at the end, that is totally fine. Here's an executive summary. This is going to show a nice chart here of all of your different sections of your P&L and that against cash. So generally, if you're profitable over time, which if we look at the net income line, you can see that we're above zero for the most part. That would be an indication that cash is increasing over time with the forecast. So we have actuals through March, and then April through December is all of our forecast. And then we can see a total here. And you can also customize these executive summaries to show different things in the summary overview, and you can add different tiles and whatnot up here as well. But I like to show the executive summary because it's kind of a good reminder for clients of like, okay, 3 months of the year is over, we still have a forecast to work towards, and you can modify that. And it modifies like as the months roll over, we can kind of keep an eye on that year-end target. And then here's our income statement a couple different ways. I just have it a couple ways in this report. And then I've got this shown a couple different ways. So this is a month-to-date P&L, so just January, February, March through March. This is a March report. And then you can also put notes here. So you can say client, this would be pre-filled out, client X paid 2 invoices in March totaling $225K. You can always modify this view as well. But this is what you can decide which report you want to make all your notes on. But this is an example of a note that we might make for a client to say, hey, why was income a little higher? Well, it's because client X paid 2 invoices in March totaling $225,000. Product revenue might be higher because of a different reason. And so you can put that note in here. So just kind of making notes so you can walk through these things with your client is really helpful. So that's one view of the P&L. Here's an example of one where we can look at, have 2 different columns here. So we can look at March 2025 compared to March 2024, and we can see that there's been some good revenue growth, 24% growth. And then we can also look at the P&L against last month. All these reports are totally customizable, but it looks like we had good growth over last month as well. So yes, good growth over last year, but also last month. And then you can always provide some insights on net income as well. So moving down, budget versus actual, we talked about how this is a very helpful report. I have 2 columns here as well. One is just looking at the month by itself, the month of March versus the budget. And then we also have year-to-date actuals versus the budget. So these 2 things are really great to look at with a client because they can get a sense of how they're tracking to their budget. So if I was having a conversation with this client, I would be doing some preparation to try to understand, well, why year-to-date are we off budget by $66,000? It's 5%. It's not huge, but can we make it up? Is there something that we had specifically budgeted for that is not happening? And what can we do to kind of make up this budget shortfall? Or maybe, like in this case, maybe revenue is down, but we also had some savings in the expenses. So actually, we are ahead in our profit for a year to date versus where we thought we would be in the budget. So sometimes that happens. So this is a great opportunity to just talk through what we thought was going to happen, what did happen, and where the savings are, if that money is actually saved or if it's just being moved to a different period. All of those things are great conversations to have during a budget versus actual meeting. And then we always would want to look at a balance sheet. I have that here just presented as month compared to last month. And then we have cash flow forecast options as well. So last month and year to date, and then a month by month cash flow forecast, and then a forecasted one. So hopefully that's really clear on how you can build a monthly report package in Jirav. And you'll always want to publish that after you've reviewed it with your client. So you can share it with your client and then it can be sitting here in the published reports. This report has been published, but if I were to publish it again, for example, I could make an adjustment. Let's call it March 2025 final. It won't override that last report. It will just create a new report. So sometimes you might publish a report and then you make some adjustments, and you can always publish another report with the adjustments that you make. All right, I'm going to hop back into my slides here. Let's talk about an agenda for how to conduct one of these meetings. So this is just an example agenda. You can figure out what works best for you and your clients, and also how long you have. I would say that ideally these are going to be at least an hour to have the time to talk about all this stuff with your client. Maybe you can work it into a 45-minute meeting, or maybe you like to have a 90-minute meeting with your clients, but an hour is what we do, and that's generally, I think, what most people would do with their clients once a month to go over a financial review. But again, this is just an example. You can do whatever you want here. I would also recommend doing this on a monthly basis and not doing it quarterly. Quarterly, you would probably need more time. And then also the problem with quarterly is if they're only getting quarterly results, then they're not able to take action fast enough to fix the next month. So if something happened during February and they're not meeting with you until April to review Q1, they're going to be having that financial trouble for multiple months before they'll find out about it in a financial review to then go and fix it. So monthly is a really good cadence to have if you're going to be an advisor role for your clients. So here's an example of a financial review meeting that has that advisory aspect to it. So you would always want to start with greetings and follow-ups from a prior meeting. So if there's anything you were supposed to provide to the client or anything they were supposed to provide back to you, it's a great time to check in on that. Or maybe you guys did connect during the month between when you met last and the time you're meeting now. And so that's a great time to just kind of check up and say, hey, yeah, we touched base on that. And, this is the resolution from that email. And you can kind of just sort of bring back to mind the things that you've been doing for them. It's a great time to get business updates. I like to open up meetings to just say, like, how are things going in the business? What's happening in the business right now? And leave it very open-ended so that the business owner actually has a chance to really get things off their chest and really talk about what is going on. And this is a skill that takes time to hone, but like asking open-ended questions so that the client feels comfortable to just start telling you about what's going on in the business so that you can start to glean information and then help them and be a better advisor. So open-ended questions are great for business updates, and then making sure that you're making notes from that too, and anything that might trigger like, hey, we might need to modify the forecast for that, or hey, that makes sense of what I'm seeing in the P&L based on what they're telling me. Listen for the connection to the financials. And then you would do your financial review. You would actually go through all those reports that we just showed you in Jirav, and then you could review the dashboard. You could also then talk about updates to the forecast and review the forecast if anything has changed. And then during the call, you might have been noting to-do items, so making sure that those get documented and shared. And then you can talk about meeting takeaways if that's something you like to do as well. But conducting a structured financial review will help both you and your clients be prepared for them knowing what the meeting's going to be about, and then for you to be more prepared with your insights and making sure your to-dos are done and making sure that you have the follow-up that you need. So I've kind of like talked about it a little bit throughout this presentation, but really, as you become seen more as an advisor, as you are providing more insights and you're able to have better conversations with your clients, like ultimately you should be able to start upselling into advisory services. Maybe you've always been in bookkeeping only, but you have always felt that you really have a lot of insights if the person would be willing to listen to you and also willing to pay for those services. If that's the case, you do have an opportunity to start upselling services. So I think some of the things that are going to like open up that conversation are going to be being able to see the value of a forecasted year In video 1, we really showed how you can upload a budget into Jirav, or you can do the auto forecasting feature to get a forecasted year, and showing some of the dashboards and the things you're able to show them of what their future could look like. And again, like, they're not always thinking in the future like that. And you can talk about how the forecast could be tailored to their specific situation. So if you're just using the auto forecasting feature, you might identify that like the auto forecasting feature is not taking into account XYZ that your client has brought up that they want to do this year. And so you could say, hey, like, the auto forecast is only based off of historicals, but you are going to be starting a new service line, and we don't really have anything in the forecast for that because that's not in our history. So like, maybe we should talk about actually creating a custom plan based on what you think is going to happen in the future and what you would like to happen in the future. And that's a great opportunity to step into a more custom approach to budgeting, which is obviously going to require additional effort from you as the service provider, and it's going to increase fees. I think the other thing that is moving from just kind of maybe doing compliance work or historical bookkeeping or accounting into advisory is when they can start to see that they're actually getting insights and that they might be able to get different results from the information that you're bringing to them. So keep that in mind if you are starting to like do these financial review meetings and you are bringing a lot of value in your insights. That's going to be a great opportunity to talk about like, well, if we talk more often, I can provide even more insights, or whatever that might look like for you. I think another one of the really powerful tools of Jirav is that you can change it on the fly and you can actually work on it live. So the system is flexible and it can adjust as the business changes. So literally, I will be sitting in financial review meetings with a client and they will mention something to me about, hey, our rent is going up by 10% at the end of the year. And I'm like, oh, well, like, let's get that into the forecast, and then we literally adjust it on the fly right there. I'm very savvy with Jirav, and so I don't need to do that after the fact. I can do it very quickly, or you can make a note and do it after the fact if you're still, learning the system. But you can adjust the forecast very easily, and those are the types of things that help make their future more clear. And that's often the time the thing that the business owner wants the most is they just want to be able to be sure that all these little pieces of information, all these decisions that they are making all the time are actually getting documented somewhere, and that they're working off of a plan that is reflective of what they actually want to do. So if you have that ability to be able to show them a plan that is reflective of their goals, then you are becoming that advisor that they really want to have on their team. And another thing that you can do is if you are on this Controller Essentials package and you're looking to like maybe step out of using the auto forecast and moving more into custom forecasting and maybe moving them up a package level, which also might mean that your advisory fees also go up. If you're moving into that another level, point out specific ways that you could improve their accuracy of their forecast. So you could say like, hey, this is based on historicals, but like, here's how I believe we can improve that. Let's talk about creating a revenue driver based off of, the actual number of units you think you're going to sell, and then the pricing increases that that are going to happen in the future. And our auto forecast doesn't have that level of granularity. So let's build something that we can actually, change the number of units over time. If we think that we're going to sell more, we're going to sell less. But, you can make recommendations based on the business of how you see that you could improve the quality of their forecast. And so that would be you'd be able to lean in more and help them more overall, which ultimately, when you're helping them more, hopefully you will be able to also upsell your services as well. All right, so that concludes video 2, where we're talking about how to structure a compelling client delivery meeting. So I hope you learned a lot today. And remember that all of this is tailored specifically to your client. You can create structures that work well for your business, but also think about how can I make this more valuable for this specific client? And that will help increase the value of your services to the client. All right, I'll see you in the next video.